Ken, direct indexing has increasingly been a tool for wealth managers. So for those advisors that don't direct index, what are they missing?
Yeah, direct indexing has become very popular in the industry. It's actually grown quite a bit over the past, let's call it 5 years. And it's expected to double by 2028, according to Cerulli. So direct indexing is really a new way to invest in the equity market, which gives advisors control over their clients' portfolios in terms of both tax management and customization.
And Northern Trust recently did a study about direct indexing. What'd you find out?
Yeah, so we did 2 studies actually. The first one 2 years ago in 2024, where we did a wide landscape of advisors to see whether they were using direct indexing. And then we zoomed in on what we call super user advisors who have already incorporated direct indexing into their practice. And what we found was that the super users found it as a game changer for how they work with clients, turning investment conversations into talking about clients' goals, tax capabilities, and estate planning.
Well, when people talk about direct indexing, they usually talk about taxes and tax harvesting, but there's other uses as well. What'd you find out from the study?
Yeah, so from the study, we found out that over 80% of advisors realize that direct indexing offers more than just tax management. In fact, I like to call it the Swiss Army knife of investing. So they can use it for things like working down concentrated stock positions that have a large unrealized gain, transitioning portfolios tax efficiently to direct indexing. Also charitable situations, much better to donate from this portfolio than donating cash.
But still, direct indexing is much less of a vehicle than mutual funds or ETFs. Is it the implementation that scares off some clients and advisors? They think it's a whole lot of trouble. What are your thoughts?
Yeah, so what we found from our surveys is that it turns out direct indexing is a lot easier to implement than they expected. And a lot of advisors wish that they got started sooner and integrated into their portfolios, clients' portfolios more broadly. So they actually identified 4 steps. One is around education, very important. Then trying it out with a few clients. Then assessing how it's working, and then fully integrated into their portfolios.
And then finally, is direct indexing for everybody? So maybe a wealth manager might be thinking, they don't have the assets or they're not the right risk profile. So I'm just going to skip that particular client when it comes to direct indexing.
Yes. In the survey, we actually identified 3 client types that would benefit the most from direct indexing. We call them achievers, individualists, and pragmatists. With the achievers, they want to be at the forefront of investing. They want to be on the latest trend, something that was once reserved only for institutions. And then there's the individualists where we say, hey, we're creating this portfolio just for you. And then finally, the pragmatists, they want to know how it works. They want to understand and they want to see measurable results from their investing portfolio. So those are the 3 types. And of course, there are minimums associated with direct indexing that you need to be in a certain tax bracket and you need to have capital gains outside that you're going to use losses to offset.
All right, well, thanks for coming on and talking about it.
Thank you.